Welcome to the deep dive. Just saying Dubai brings these images to mind, right? These huge skyscrapers, just massy ambition.
Absolutely. It's instantly recognizable.
And it's not just the look. It's climbed the global ladder, fast hitting fifth recently in the Global City Index. But, getting that kind of status isn't just about impressive buildings. It's got to be about making things work for business. How does a city actually do that, pull in global companies like that?
Yeah, it's definitely a very conscious strategy. It goes way beyond the skyline. It's really about building an entire ecosystem.
Right.
And that's exactly what this pile of material you've got here digs into: guides, FAQs, different expert takes, all looking at the nuts and bolts of actually setting up a business in this, very dynamic environment.
Exactly. So our mission here today in this deep dive is pretty straightforward. We want to cut through all this information and pull out the absolute must-knows if you're even, thinking about setting up in Dubai.
Makes sense.
And we're going to focus particularly on two options that seem to pop up again and again in your sources, presented as having really distinct plus points: free zones and offshore companies. Okay, let's unpack this. What are your sources telling us? So if we park the amazing photos for a second, what does your material say really makes Dubai such a magnet for investors and entrepreneurs?
Well, the sources paint a really clear picture here. Dubai isn't just regionally important. It's positioned itself as the financial hub for the whole MENA region, Middle East, North Africa, and South Asia too.
Wow.
Just think about the kind of market access that opens up. You're talking potentially billions of customers, partners, all within relatively easy reach.
And the rankings seem to confirm that. We mentioned fifth in the Global City Index. Your sources add that Dubai is consistently up there globally for ease of doing business. It's in the top 7 for FDI inflows.
Foreign direct investment, yeah.
Top 10 for economic competitiveness. Top 10 as a smart city, too.
Yeah.
And, maybe surprisingly, for a business hub, top 10 globally for quality of life. That's quite the mix.
It really is.
Yeah.
And when you look at the actual benefits listed for setting up shop there, drawing from guides like the IFZA1, they are extremely persuasive. You've got a tax setup with 0% personal income tax.
Zero
personal.
Yeah.
And a very low corporate tax rate, especially compared to many other global centers.
That alone is a massive pull factor, I imagine. Plus, the sources keep mentioning the option of 100% foreign ownership. That seems key.
Oh, definitely. It means you don't necessarily need a local Emirati partner holding the majority share, which, is often the standard requirement if you were setting up on the mainland for a lot of activities.
Right, having that control.
Exactly. That full control is a major draw. Then you add things like zero currency restrictions, total freedom to move your capital around, repatriate profits whenever you want.
So no getting stuck.
Nope. Plus its strategic location, right in the middle of global trade routes, a stable political climate, world-class infrastructure, transport, logistics, event venues, they're all really top-notch. And access to a huge pool of international skilled talent. It's all designed to basically smooth the path for global business.
Okay, so that's the big picture appeal. Now, your sources get into the different ways you can actually structure a business there. They use this term business entity. What exactly are we talking about there?
It's simply the legal structure you pick for your company. Think of it as its formal identity. It dictates things like who owns it, how it's run, and really importantly, how it's taxed and what your personal liability is.
Like sole trader, partnership, LLC, those kinds of things.
Exactly. Those are common types you see everywhere.
And in Dubai specifically, your sources seem to point to 3 main sort of categories or jurisdictions for registration: mainland, free zone, and offshore.
That's right.
They mention the mainland, saying it usually involves the Department of Economy and Tourism and often needs a local sponsor or agent if you want full access to the local UAE market. But like you said, the bulk of your material really seems to focus on comparing and contrasting the free zone and the offshore options. They present them as 2 quite different routes.
They really are. Both are popular, absolutely, but for quite different reasons, and they come with very different rules and implications. And that's exactly where we should probably focus our attention today.
Makes sense. Let's start with free zones then. You see signs for them all over Dubai and the other Emirates. What actually are they?
So your sources explain them as these specific sort of geographically fenced-off areas within the UAE. Each one's run by its own authority, could be governmental, could be private, and they operate under their own special set of rules, different from the main UAE law.
And the purpose?
The main goal is to offer specific incentives to attract particular types of businesses. They're often themed,
Right. And the number one benefit, the headline feature that keeps coming up in your sources for free zones, is that 100% foreign ownership, isn't it? Being able to own it all yourself without needing that local partner.
That's definitely the big one for many international companies, yeah. But beyond ownership, the tax setup within the free zone is also a major draw. You're generally looking at corporate tax exemption.
So no tax on profits.
Generally, within the zone rules, yes. Exemption from personal income tax for your employees working there.
Yeah.
And often exemptions from customs duties on goods you import into the zone for your business.
Okay. What about VAT? The UAE has VAT now.
It does. The standard rate is 5%. And generally, that applies in free zones too. However, free zone companies can often reclaim the VAT they pay on their business expenses, and there might be exemptions, especially for goods or services exported outside the UAE. So it's still very advantageous.
So it sounds almost like a tax-advantaged bubble. What else makes them attractive?
Something really crucial, and this is a key difference we'll keep coming back to when we compare with offshore, is visas. Free zone companies are eligible to sponsor UAE residency visas.
Ah, so you can actually live there.
Potentially, yes. For you as the owner, for your employees, and even their families, the number of visas you can get is usually tied to the size of your office space or the specific nature of your business. This is a huge deal.
I can see why.
You also get the full freedom on currency movement, profit repatriation, and generally good access to international banking facilities based there.
Okay, operationally though, your sources mentioned they can work within their zone and do international business. But what about dealing with the rest of the UAE, the mainland?
That's the key limitation. Generally, a free zone company cannot directly trade or provide services to customers located on the UAE mainland. To do that, they usually need to go through specific channels, like appointing a mainland-based distributor or agent, which can add complexity and cost.
Okay. So it's not quite open access everywhere.
Not directly to the mainland market, no. But on the plus side, the setup process, getting your license within a free zone, is often designed to be much simpler and faster. They often talk about a single window system.
Easier paperwork?
Potentially, yes. And within the zone itself, you're generally subject to fewer regulations from the standard mainland government departments. It's a more self-contained regulatory environment.
Okay, those are the upsides. What about the requirements? What do you actually need to do to set up in a free zone?
The absolute fundamental one, based on your sources, is physical presence. You must have some kind of physical space registered within that specific free zone.
Like an actual office?
It could be a dedicated office, yes.
Yeah.
Or, depending on the zone and your business activity, sometimes they allow for a flexi desk or a shared workspace arrangement. But you need some physical footprint there. That's non-negotiable.
And I guess that impacts the cost.
Exactly. That's a primary reason why setup costs for free zone tend to be higher than going the offshore route. You've got rent, potentially fit-out costs, associated fees for that space. Also, as we touched on, your business activities might be restricted. Many free zones are specialized.
You mentioned themes, like Dubai Media City for media, DIFC for finance.
Precisely. And your sources note DIFC, the Dubai International Financial Center, is a specific type called a qualified free zone. It has its own distinct rules, including allowing 0% corporate tax, but only on qualifying income, something financial firms would need to investigate closely.
Okay.
Then you have Jebel Ali Free Zone, JAFZA, which is huge and very focused on logistics, trading, Dubai Silicon Oasis for tech companies, Sharjah Media City for creative fields, others like Fujairah Free Zone, IFZA, Ajman cover a mix of trade and manufacturing services. Your license type has to match the zone's focus, like a commercial trading license or a professional consultancy license or industrial.
I did see in one source it listed offshore as a possible license type within some free zones. That seems a bit confusing if we're comparing free zones versus offshore companies as the two main options.
That's a really good point. Yeah, the terminology can overlap sometimes. Based on your sources, it seems that while some specific free zones, maybe particularly ones geared towards finance or holding structures like DIFC, might offer licenses or company structures that function similarly to offshore setups for specific purposes, like holding assets or IP.
Okay.
The main comparison your sources are making, the fundamental split, is between the typical free zone company, the one needing physical space, granting visas, operating in the zone and internationally, and the completely separate offshore company structure. That offshore structure explicitly doesn't need physical space, doesn't grant visas, and is purely for international dealings. So we should probably stick to that main distinction your materials focus on.
Got it. That makes more sense. So simplifying the steps for setting up a typical free zone company,
Okay, boiling it down from your sources. First, nail down your exact business activity and figure out the right license type for it. Then, register your company name. Decide on the legal form. Common options in free zones are FC LLC, which is a free zone limited liability company, or maybe an FCCO, a free zone company. Depends on shareholders.
Right.
Then, critically, select and secure your physical space within that chosen free zone. After that, you apply for initial approval from the free zone authority. This usually involves submitting documents like passport copies, maybe a brief business plan, a letter saying what you intend to do.
Okay.
Once you get that initial nod, you complete the registration. That means submitting the formal application, paying the various fees, and providing the core legal documents like the Memorandum of Association, MOA, and Articles of Association, AOA. Those basically outline how your company is structured and governed.
All right. Now let's pivot to that other main path your sources highlighted, offshore companies. How are they fundamentally different?
Okay, so offshore in the UAE context, according to your sources, refers to a company registered in a specific jurisdiction like RIKICC, that's Ras Al Khaimah International Corporate Center, or JFCA Offshore, which is linked to Jebel Ali Free Zone, but distinct. The absolute key point is these companies are set up only for international business or holding assets outside the UAE mainland.
So, strictly no local business.
Strictly. They are explicitly forbidden from doing business within the UAE itself. They operate under the laws of their specific offshore jurisdiction, which are designed to offer different advantages, mostly around flexibility and cost efficiency for international operations.
Okay. What are those advantages then?
Like free zones, you get 100% foreign ownership. But the main draw here is often tax efficiency, which is directly tied to that no mainland operations rule. If your business activities are entirely outside the UAE, these companies are generally exempt from corporate tax, income tax, and VAT.
Ah, so the tax benefit is conditional on where the business happens. What else? Privacy seems to be a big point mentioned.
Yes. Your sources definitely highlight that for jurisdictions like RIKICC and JFC offshore, the details of shareholders and directors usually aren't on a public register, so there's a higher degree of confidentiality. They're also often noted as being good structures for asset protection purposes.
And setup seems simpler and cheaper.
Generally, yes. The lower cost and often faster setup time stem directly from the biggest difference. No need for a physical office.
Right. That was the key requirement for free zones.
Exactly. Offshore companies also tend to have fewer ongoing administrative burdens, sometimes no requirement for an annual audit or formal annual shareholder meetings. Board meetings can often be held anywhere in the world. It's all geared towards making international, sometimes quite passive operations easier.
Okay, so what are the requirements then, if not an office?
As we said, no physical office needed. The only mandatory things are a registered office address within that specific offshore jurisdiction and appointing a licensed registered agent. Yes, this agent is crucial. They're your official point of contact with the registration authority. They handle the filings, the communications. You have to have one. But obviously, just paying an agent is much cheaper than renting and maintaining an office.
Makes sense. What kind of activities can they do then, internationally?
Your sources list things like international trading, providing consulting services to clients outside the UAE, setting up holding companies to own shares in other businesses globally, registering intellectual property. They also mention owning real estate, but that's specifically restricted only in certain designated freehold areas in the UAE and often linked to particular offshore jurisdictions like JZA offshore allowing it.
And the absolute no-go areas again.
Strictly prohibited from any business activity within the UAE mainland. And they cannot operate as insurance agents, brokers, or insurance companies. That's very clear.
Got it. What about the company structures? Are they similar?
Yeah, you often see familiar international structures used for offshore purposes, things like LLCs, limited liability companies, private limited companies, holding companies, and also SPVs, special purpose vehicles, which are often used for very specific investment projects or holding particular assets.
And even within offshore, your sources point out differences between the jurisdictions, right?
Yes, they do. RAKICC, for example, is often mentioned as being very cost-effective and notably fast for setup sometimes around a week. It only requires a minimum of one shareholder and one director.
Okay.
JFZA, offshore, on the other hand, is seen as having a very strong reputation, and it's the one often linked to being able to own property in those specific designated Dubai areas. But setup usually takes longer, maybe around 4 weeks, and it requires a minimum of 2 directors, not just one.
Interesting distinction.
And then you have others like Ajman Offshore and Alquane UAQ offshore, which are often positioned as budget-friendly options with perhaps simpler processes. So yeah, even once you decide offshore, you still have choices depending on your budget, speed requirements, and specific needs like property ownership or director structure.
So the setup steps simplified for offshore.
Choose your jurisdiction first. RAKICC, JDOZA, AJMAN UAQ. Decide your business activity, making absolutely sure it fits the offshore-only rules. Reserve your company name. Then gather your document sources, typically list passport copies, proof of residential address for shareholders, directors, maybe CVs, details of your proposed company structure, and often a basic outline of your business plan.
And the agent is key here.
Absolutely crucial. You engage a registered agent approved by that jurisdiction. They will guide you, check your documents, and handle the actual submission to the offshore authority. Once everything's approved, you get your certificate of incorporation. Then you need to open a corporate bank account, which, as we'll discuss, has its own points to consider. And then you're basically set up for your international operations.
Okay, let's bring these two side by side now. Based on everything in your sources, what are the absolute make or break comparison points? Where do people really need to focus when choosing between free zone and offshore?
It really seems to boil down to three main, stark differences. One, the need for physical office space. Two, the ability to operate within the UAE. And three, perhaps most critically for many, eligibility for residency visas.
Okay, walk us through those again concisely.
Sure. Free zone requires physical space, desk or office. Allows operations within the zone and internationally, but generally not directly on the UAE mainland. Offshore does not require physical space, only a registered agent address. Strictly limited to international operations, no business allowed on the UAE mainland.
And the visa difference, you said that's a big one.
It was huge. A free zone company setup makes you eligible to apply for UAE residency visas for yourself, staff, family. An offshore company setup, according to all your sources, does not confer any right or eligibility for UAE residency visas.
So bottom line, if living in the UAE is part of the plan, or having staff based there,
then a free zone is almost certainly the structure you need to be looking at. Offshore just doesn't provide that pathway to residency. That single factor could be the decider for many people.
that is crystal clear. Okay, what about cost then?
Generally speaking, the initial setup cost for an offshore company is typically lower. And the main reason is simply that you're not paying for mandatory office space rental and associated costs, which you are with a free zone.
Right. Now, banking. This came up, and your sources hinted at some nuances. Both types can open corporate bank accounts, correct?
Yes, technically, both free zone companies and offshore companies are eligible to apply for corporate bank accounts, including potentially accounts with UAE banks.
Wow.
But the practical reality, as highlighted in your sources, seems to be that it's often significantly easier and smoother to open a local UAE bank account if you have a free zone company.
And why is that? The residency link again?
Exactly, because the free zone setup typically comes with residency visas for the owners or managers. Banks find it easier to deal with residents. Offshore companies lacking that residency link for their principals might face more scrutiny, more questions, higher thresholds, or difficulties finding a UAE bank willing to onboard them easily without a local resident signatory they're comfortable with.
So possible for both, but potentially less friction with a free zone for local banking.
That seems to be the takeaway. You'll still need all the standard stuff for either the company's memorandum of association, passport copies, proof of address for owners, undergoing the bank's Know Your Customer KYC checks, probably making an initial deposit. Your sources mention banks like Norbank, Emirates Islamic, Emirates NBD, RAK Bank, CBI as options people explore, but that residency factor can really smooth the process.
That's a really useful practical insight. Okay, another point that applies more broadly, this ultimate beneficial ownership or UBO regulation. What did your material say about that?
Right, your sources mention this UAE Regulation Cabinet Resolution No. 58 of 2020. It's basically about transparency, requiring companies to know and declare who ultimately owns or controls them.
So who's really pulling the strings behind the scenes?
Pretty much. It applies to companies on the mainland and, importantly, also to companies in commercial free zones. They generally need to identify any individual who owns 25% or more of the shares or voting rights, or who otherwise has significant control, and maintain an internal register of these beneficial owners.
And do they need to file this info somewhere?
Yes. They typically need to keep these UBO records accurate and may be required to submit this information to their specific registrar, whether that's the Free Zone Authority or another body. There are some exceptions, like for publicly listed companies or government-owned entities.
So the takeaway for someone setting up.
The takeaway is, whether you choose free zone or offshore, you need to check the specific UBO requirements for your chosen structure and jurisdiction and make sure you comply. It's a key compliance point now.
Okay. And finally, just to recap the tax situation across both options one last time.
Sure. Broad strokes. UAE overall has 0% personal income tax, low corporate tax. For offshore companies, the main benefit is tax exemption, corporate income, VAT. But that's strictly conditional on doing zero business within the UAE mainland. For free zone companies, you get specific exemptions within the zone, often corporate tax, personal income tax, customs duties. General UAE VAT applies, but as we said, it can often be reclaimed on expenses or might be exempt for exports. And remember, other taxes like customs duties, excise tax, tourist taxes might apply depending on your specific business activities, regardless of structure.
Right. Now, stepping back from the structures for a second, one of your sources, that IFCA guide, also included some foundational tips for success in Dubai, things that apply no matter which structure you choose.
Ah, yes. Those are good reality checks. They emphasize things like needing full commitment. You can't just dip your toe in. It demands time and resources.
Makes sense.
Also, the need to really clearly define your unique selling points, your USPs. Dubai is competitive. You need to know what makes your offering stand out.
And setting clear goals, specific, realistic, measurable targets. Standard business practice, but crucial.
Absolutely. And finally, assembling the right team. Having people with complementary skills is vital for actually getting things done and growing.
Yeah, those are solid reminders from your source. The legal structure is just the start. You still need solid business fundamentals.
Exactly. It's the foundation, but not the whole building.
Okay, so we've really dug into the core differences between setting up in a Dubai free zone versus going the offshore route, based entirely on the sources you provided. We've covered the ground from physical presence, where you can actually operate, that crucial issue of residency visas, the costs involved, the potential quirks of banking, compliance like UBO, and the tax implications.
And your sources are very clear. There isn't a single right answer here. The best option really truly depends on your specific situation. What are your business needs? What are your long-term goals? Do you need that physical presence? Is living in the UAE part of the plan for you or your team? What exactly are you doing? Is it purely international, or do you need some form of UAE market interaction? And of course, what's your budget for setup and ongoing costs?
It's clear Dubai has intentionally created these distinct pathways to attract different kinds of global business. So considering everything we've talked through today, especially those really sharp contrasts around residency, the need for an office, and where you're actually allowed to do business, here's something to think about. What single factor becomes the absolute most critical decider for you when you weigh up these paths into the UAE market? What's the one non-negotiable that would make either free zone or offshore the clear winner for your unique circumstances?